Yeah, good morning, everyone. Market were mixed on the Friday in US. Today in Asia also, market are indicating a bit positive bias, but some markets are still negative. Uh, Whereas commodities are seeing some corrections, wherein aluminum was flat, but copper, which went up by around 1% on Friday, came off uh, today, and it's -1%, whereas oil is coming off by $0.5. Iron ore is down by around 2%. What we are seeing is that the result season is over, and we had seen more of a result on a softer tone. Whereas if we compare it with Q1 and Q2, it has seen marginal improvement, wherein Q1 and Q2 had seen somewhere decline, somewhere growth of around 2 to 3% in Nifty earning growth, whereas in the third quarter, it has seen around 4 to 5% growth in the Nifty earning. So marginal growth, but yeah, very much lower than the past history. So we had already seen the impact of the similar thing on the overall market as well. So going forward in the fourth quarter, the expectation is that the growth will revive a bit. Uh, it may move up to maybe around 8 to 10% from here on. So things are reviving, but at a lower pace, which is getting uh, impacting the overall market as the valuations of mid cap and its small cap are very high. So overall, from a day perspective, looks like we had seen consistent decline in mid cap and small cap. Then need to be seen whether we can see some reversal of the same of mid cap and small cap indices, specifically shares in that. Though there is no as such any event or any supportive actions which can support that. But since the market has declined substantially in last 4 5 days, specifically in the small cap index, there is some respite which may come as the result season is getting has got over. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we're likely to witness some sideways momentum during the day. Last week, we have seen a very sharp fall into the Nifty, almost down by 2.7%, which gives us some sort of a cautious sign. The interesting fact is that it is trading below the 20 days moving average as well, which comes to nearby 23,260 levels. So, as long as Nifty sustains below that level, the view will remain cautious on the technical front. Downside for today intraday purpose, the first support is placed at around 22,840. Below that level, 22,770 can be tested and 22,700 levels are can be seen into the market. Whereas on high side, for the today intraday purpose, the immediate resistance is placed at around 23,000 psychological mark. If it's go beyond that levels, then 23,100 and 23,240 levels can be twice tested, a resistance provided by its 20 days moving average. On the technical front, the view will remain a cautious as long as Nifty trades below 23,240 to 60 levels on the closing basis. Coming towards the bank Nifty, 49,000 will be the first immediate support levels. If it doesn't respect that levels, then more selling pressure can be witnessed into the bank Nifty, which might take a indices towards the 48,740 to 48,500 levels on the downside, whereas the resistance is placed at around 49,540, 49,770. Just try to avoid a major long positions at the current market price. Longs can be initiated only with the strict stop losses. That's it from my end. I request Nito to take a call forward.
Yeah, thank you, Swati. On the derivative front, if you see the overall positions are still negative. Also, very importantly, 23,000 level has been broken below. Now, also along with this, the highest put base has shifted lower from 23,000 to 22,500. So both of these things are negative. Add to that, additions in the open interest. Open interest is already heavy, and there are still more additions in this. So that becomes further negative. So at this point of time, at least from a near term or a couple of days perspective, you can see some more selling pressure that can probably come in. There is a likelihood that some support can come in from that 20 to 500 odd levels, but we might just see Nifty drifting lower at this point of time, up to those 20 to 500 odd levels. So yeah, look out for the same. Strong resistance on the upside is now being formed around 23,000 to 23,100 levels. Once this is crossed above, you can probably see some relief buying coming in, but overall positions look negative. From the stock specific front, most of the stocks witness selling pressure, and now the companies which were new in the F&O space are seeing further selling or erosion. So, the likes of BSC, CDSL, CAMS, all of these stocks have witnessed a lot of short built up, and they are likely to witness further selling going forward. So, yeah, look out for the same. Might see more pressure on these stocks. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Thank you. Good morning, everyone. On the news update front, Finotex Chemical has received approval for its product Aquastrike Premium from Central Insecticides Board. It is a formulation based. It is a formulation based on azadirachtin, which is based on its revolutionary biotechnology mosquito control solution, and this is through its wholly owned subsidiary of FSPL Private Limited. The innovation formulation eradicates mosquitoes as well as preserves water quality. So thus it is making cost effective and sustainable alternative to chemical based insecticides. So overall, this is positive for the Finotex Chemicals. On the result front, Sudarshan Chemical posted the result. The result was below expectations. Revenue grew by around 18% on a YY basis. The key growth was driven by its specialty segments product portfolio, which caters to coatings, plastics, ink, and cosmetics. However, on operating level margins, improved on YOY basis by 100 basis points at 11.9%. However, reduced by 260 basis points on sequential basis. In the press release, it has highlighted that UBARC acquisition is progressing well on closing the transaction, which was expected to be closed in 3 to 4 months of announcement in October. The stock is currently trading at a PE of 24 times to FY26 earnings, and we will provide further updates from the earnings call today. On Friday, there were a couple of con calls. So first one is Lakshmi Dental Limited. In the con call, the management highlighted its segmental performance. There are key segments like dental laboratory offerings, which contributes around 62% of revenue, and aligner solutions, which contributes 33% of revenue. Aligner solutions provides the EBITDA margin at around 24%, and it mainly focuses on eliminating the logistics delays and thus expects further improvement in the margins. Also, pediatric dental products, that is Kidze Dental, where the company is having the ownership of 60% stake, and the company is seeing the delays in registration clearance for medical devices that has impacted the sales during the quarter. However, the company expects the revival from from the FY26 once the registrations are clear, and Q4 remains to be soft. In terms of geography, domestic business contributes 66% of the overall revenue, and the remaining from the 34 from the international market. It is more dominant in the Western India and expects to expand in the north, southern, and eastern markets. In terms of exports, the recent partnership in the US and UK in terms of distribution to contribute further to its international business growth. Also, it is going to participate in world's largest dental conference in Germany, which is expected to drive further growth. With IPO proceedings, it has repaid worth rupees 12.5 crores of debt in quarter 3 and expects to be debt free by FY26. The company has given the guidance of 20 to 25% revenue growth over the next 3 to 5 years, and FY25 revenue targeted as rupees 240 crore with PAT margins in the range of 13 to 15%. The stock is currently trading at 107 times to 9-month FY25 annualized earnings, and we are positive on the stock. Stanley Lifestyle hosted the con call. With regards to quarter performance, revenue stood at around 110 crore with 6.5% of growth on a sequential basis, and EBITDA margin was at 18.6%. Overall, the gross margin expanded to 58.1% compared to 54.7% in quarter 3 FY24. Overall, improvement in the gross margins was majorly due to localization efforts, and the company is expected to localize further up to 35% of its leather purchase this year. And also, the product mix has also contributed to overall gross margin expansion. The company highlighted B2B order book was relatively flat, and orders were delayed due to tariff issues in America. The B2B2C segment was shifted to a cash and carry model, which impacted overall sales. And the company plans to reintroduce the credit facilities for this segment after grading them, and this is expected by quarter 2 of next year. Thus, we can expect some bounce back from there. And B2C is expected to see good growth with new store openings. The stock is currently trading at 58 times to TTM EPS, and the outlook is neutral on the stock. Thank you.
Good morning. Samvardhana Motherson International Limited posted the result. Company's revenue declined on quarter-on-quarter basis, but increased on year-on-year basis. And EBITDA grew on both quarter-on-quarter and year-on-year basis. EBITDA margin came at 9.7% versus expectations of 8.9%. PAT is below expectations. So overall result is broadly in line with expectations. And the stock is currently trading at P of 17.2 times FY26 EPS. One IPO will be listing today. The name of the company is Ajax Engineering Limited. We have given neutral rating to this IPO. Company's overall issue size is 1,269 crore. Talking about the company, Ajax Engineering is a leading manufacturer of concrete equipment, offering a diverse range of products across the concrete application value chain. Ajax holds dominant position of 75% market share in the SLCM market and benefits from strong brand recognition, innovation, and wide dealer network. However, its heavy reliance on self-loading concrete mixers, that is 85% of revenue, and the roads and highway sector, approximately 35% of revenue, poses a risk. Because of these factors, we assign a neutral rating to this IPO. Thank you.
Good morning. I would like to give some highlights from the Hindalco Industries con call that we attended on Friday. The outlook is long-term positive on the stock. On the aluminium business front, Indian aluminium upstream volumes will remain stable until FY29, when the new 180 kiloton smelter comes online. Downstream aluminium volumes to increase with Aditya FRP project commissioning in FY26, raising the total FRP capacity to 600 kiloton. The guidance on aluminium realization is that premiums and pricings will depend on LME aluminium prices, currently stable at 2,200 to 2,300 per ton. Alumina refinery expansion is done at Aditya Alumina Odisha with capex of around 7,500 to 8,000 crores. It is expected to be commissioned by FY26. On the copper business front, the copper recycling plant with a capacity of 50 kiloton is coming online in the FY26 to boost volumes. Copper EBITDA per quarter will settle at 600 crores in FY26, which is currently at 777 crores. Thank you.
Yeah, Sangvi Moore had a con call on Friday, and management has indicated that they had planned for capex of around 150 crores for the fourth quarter. That is backed by the firm orders for crane hiring. Whereas the overall scenario up till now was a bit subdued, and uh, there was a increasing competition for crane hiring. But going forward, with this capex, some improvement can be visible. The yield company is expecting at around 2%, and apart from that, the crane EPC business has shown comparatively better performance in the last quarter, and which can continue in the coming period. Uh, Overall, the Sangvi Movers outlook seems neutral in the near term, but long term can be positive. And also, the valuations are now at reasonable at 12.6 time FY26 earnings. So, that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might see some cool off in commodities. In gold, prices can pull back till 85, 200, 300 levels, whereby some selling pressure could be witnessed. So selling around 85, 200 is recommended with a stop loss of 85, 550. On downside, again, it can test the support area at 84, 700 to 500, wherein silver it can pull back till 96 200, and there from there one can witness selling pressure. So sell with a stop loss of 97,000, and on downside again it can test 95,000, 700, wherein crude oil prices are weak below 6,200. So it could consolidate from 6,100 to 6,250. So any pullback around 6,180, one can initiate a sell with a stop loss of 60 to 50. And in natural gas, prices are expected to correct. Prices are expected to test 305, 300 levels on downside. So one can initiate a sell with a stop loss of 327. And in metals, copper, one can initiate a sell with a stop loss of 871, and on downside it is expected to test 860, 858. And zinc also expected to correct till 264. So selling around 268 is recommended with a stop loss of 270. And that's it from us. Thank you very much.